G'day Brent, thanks for coming in today, and good to see your moustache coming along there, mate. Looks pretty good.
As I said before, your moustache is looking a lot better than my one.
Coming along, I think it's the thick black hair helps.
Yeah, to be fair, mine is grey, so it's hard to see.
Hard to see, alright. I'll just get this recording. See if we can try that. That's going. So, yeah. How is it going at home? Alright?
Yeah, not too bad. Still keeping pretty busy.
Yeah.
Always something to do. How about you?
Yeah, so we've got a little bit of spare time, I guess, to do this kind of thing and connect with some people.
Yeah, it's all about keeping clients informed and up to date with everything that's going on. So.
Yeah, totally. Yeah. Yeah, you were on a call just before, were you? Yeah.
Yep, so we had a few calls with the banks over the last week and a half. So obviously they're all coming out with their financial assistance packages that you would have seen on the news and stuff like that. So really making it a lot easier to help clients at the moment, which is really good. So they're coming to the party in a certain respect.
Yeah, that's kind of what I'm hoping to chat to you about today, I guess, on the mortgage scene. Obviously got people out there that a little bit up in the air about what's going on. So, yeah, what are you sort of seeing out there? What's the feedback been? What are people asking about?
We've had a lot of client inquiry. Obviously, we have quite a diverse range of clients and very differing situations at the moment. So, I guess for clients that haven't had their incomes affected, it's still just business as usual. They nothing changes with their lending. They're still expected to make principal and interest payments. The assistant packages really kick in when something's happened to one of your salaries or your both salaries, i.e. a reduction or a loss of job, that kind of thing. So they basically have three types of packages, I guess, are the main three that you can go for at the moment. The first one is term extension. So that's when, at the moment, a lot of clients are coming off. They've been paying their loan repayments at a higher interest rate because obviously they've started and interest rates have been coming down and down and down, and they've left their repayments at the same level, which is paying their loan back quicker, which is really cool and good to do. But obviously in this situation, maybe you can't afford to pay your loan back quicker now. So the first step, if you can, is to reduce your term back to the maximum length that you're allowed. What that does is obviously it's going to drop your repayments down, which will free up a bit of cash, but it also means you're still paying principal and interest, which is you're still reducing your loan principal balance, which is good. If you can. Obviously, not everyone can do that type of arrangement. Their incomes have dropped by a significant amount, so they have to go below the minimum repayment. So the two options there are what's called interest only. So that's when you just pay the interest on your loan. No principal gets paid off. So that's paid every month. So you're basically just covering your costs, I guess, so to speak, your interest costs. Your principal balance doesn't reduce. Okay, so come the end of lockdown when everything's back to normal, your loan balance will be as it is today.
Yeah, right.
The last option, and the one that has been added to the packages at banks office, is what's called a mortgage repayment holiday or a mortgage deferral plan. What the government is and Reserve Bank have suggested and helping the banks with is a 6-month mortgage repayment holiday. So what that means is you don't make any principal or any interest payments during the next 6 months, but your interest is added onto your loan.
Right.
Okay, so that's quite important to know that whatever you start with your loan balance as at today, if you go on a mortgage repayment holiday, the interest is going to be added on and on and on and on until you come off that period. So that's a maximum of 6 months. You can stop at any time within that 6 months. So that's probably the main additional assistance that the banks have come up with personal clients in the way at this stage.
Yeah. Okay. Yeah. So I guess your people that are potentially business as normal, or maybe just 80% of what they're earning, or what have you. So potentially they can stay as they are, or they've got those other options as well, whether they can.
Yeah, I mean, if you've had any form of reduction in your income, you can apply for any three of those packages. So I guess you need to weigh up what you think is going to work best in your own personal situation, then maybe look to apply for that package at that stage.
Yeah.
Yeah.
Okay. So I guess obviously if you can keep paying your mortgage payments and it's not putting too much financial stress on you, that's obviously the preferable way to go. You're still reducing your debt, you're reducing your interest costs and so on. But if you can't, at least you know you've got a short-term option to get you through this next 4, 6, 8, 12 weeks, whatever it will be.
Yeah, which is really important, and I guess when you got your families at home and what have you, and not sure how things are going to pan out.
There's a lot more stressful things happening out there. So if we can get your mortgage to not be one of those things, I guess that's a positive. Yeah.
Yeah. Okay. Yeah. Cool. All right. So your team are all working remotely and what have you, and still business as normal as much as you can.
Yeah, I mean, we're dealing with a lot of clients still have loans coming due with their refixes, so we have a lot of refix queries, have a lot of interest rate queries about just the general stuff. Should they fix for 1 year, 2 year, that kind of thing.
Yeah.
A few top ups going through, so people taking a good time to reassess their financial situation and think, okay, how can I reduce my outgoing, so they might consolidate some debt together or extend loan terms, that kind of stuff. So, and we can help with we can help with the assistant packages. So if clients come to us first, we can talk through the 3 options that are out there and work with them on what the best one may be, and then help them apply for that package.
Yeah, nice.
There's some positives there. I mean, there are options for people, so it's not all doom and gloom as we're sort of thinking.
Yeah, but I guess the main thing is, and this is very important, is you apply for the package, you apply for assistance before you get behind in your loan repayments. If you start getting into trouble and you start missing payments,
sure,
that's when sometimes it gets a little bit tricky to be able to extricate yourself out of that. So if we can get onto it before you get into arrears, then that's the best way to go.
Good tips there. Yep, thank you for that. Anything else you're sort of picking up on as things go by? I mean, we don't know if this is going to carry on for longer than what's expected. So,
I guess it's just batten down the hatches at the moment and take each day as it comes. Make sure that we're all obeying the lockdown rules, I guess, and staying local and being kind to each other. And it's sometimes it's just pick up the phone and have a chat.
No, that's awesome, mate. Thank you for that. Take it easy out there. Look after the family and appreciate your time. Thanks for that. And take care. All right. Cheers.